Good evening. Welcome to the ShadowTrader video weekly for Sunday, July 29th, 2007. Disaster, as Happy Slip's dad would say, right? Unbelievably bearish week in the markets. I mean, huge correction, 4 to 5%, whatever. And S&P just got slammed. All the major averages just got slammed. I'm going to show you a brief run-through of Dow, S&P, NASDAQ, and Russell, and we're going to see how bad the carnage was, and then I'm going to get into some other things I'd like to point out that will show you why I think it may be over, or the worst of it may be over, and we should see somewhat of a turn in the markets soon. So let's take a look together. First of all, S&P 500, horrific move down. I mean, we made new highs last week at the 1555 area, right? And we ended up closing almost at 1455. Do you guys realize this is 100 SPX points down? That's 100 divided by 1555. That's a 6% loss from here. Dow also got murdered, killed, right? NASDAQ Composite. Oops, there we go. NASDAQ Composite, horrific loss as well. And the greatest loser of the week award, definitely goes to the Russell. Small caps, Russell 2000 got absolutely annihilated. The Russell has not had an up day here in 6 sessions. Okay, so obviously things got really hammered. Now, why I think the worst may almost be over. First area I want to show you is SPX weekly. These weekly trend lines in the S&P tend to hold really well. So you got a low here, low here. This is a year. This is July 06, July 07 where we are now. Look at the trend line right to here, right around 1450. That's the first case I want to make for why we may, slow down a bit. Dow weekly, bam, erased all this here from June onward. But look at the support level here. This is that horizontal area I drew earlier, right? 1, 2, now 3. What I would expect that the Dow is going to do here is probably fake everybody out, go somewhat lower, okay, back off a little bit, and then have a turn back upwards. This backside of this trend line here, right, this area may act as a resistant area, and this, if we were to bounce back somewhere in the 13.58 area. Okay, now let's take a look at the VIX. VIX spikes to extreme levels like this generally indicate short-term market turns back to the upside, right? And if we look at an SPX and we lay the VIX over it, and we'll switch it to a line here so you can see it underneath, right? Bingo, right? See how the spikes correlate? Market slams down, VIX up here. VIX makes a lower high, market turns. Market slams back down, VIX explodes to a new swing high, right? Heavy bearish day, VIX explodes, and then look here. As we move down, look at this explosion in the VIX, back up to 24. And you can go back historically, and you see how it always precedes somewhat of a turn, at least a short term. At least a short term like this. Doesn't necessarily mean it's going to follow through. As here, it failed again, and that may happen again, right? But you can see here how there is definitely correlation, okay? So let's remove that. That's my VIX argument. I already showed you the trend line. The other thing I want to show you now, and this is going to be something that's going to be coming up soon in new ShadowTrader Pro focus reports. You're going to like this a lot. Let me show you something here. This, a lot of you guys always ask me during the broadcast, like, I wish I could see what you see. Well, let me show you what I see every day. This is what I use. This is how I gauge what's really going on in the markets, okay? This is a spider hourly chart, and this down here, this is my new breath ratio that you guys hear me talk about all the time on the broadcast. And I'm going to be adding this in to the ShadowTrader Pro Focus Report. More on that later. This number here is essentially a relationship between the amount of up volume in the markets right here and the amount of down volume on the NYSE. You take the UVol number and then you divide it by the total of these two. So it's UVol, NYSE up volume, over the NYSE up volume plus the NYSE down volume, which obviously would give you a number such as, like, I don't know, 0.40. And then I multiply it by 100. I have a little EFS running here for those of you that use eSignal. I multiply it by 100 to give me a reading between 0 down here and 100 up here. If it's reading at 50, then the market is at parity, and the up volume is exactly half of the up volume and the down volume. Okay, now, readings that are under 25 here, you can see, generally show near-term bottoms. However, in this case, the market kept slamming down. What I want to point out is that the reading here on the selling on this day, which was Thursday when the Dow lost 311 points and the S&P lost 35. The reading here was extremely extreme. This number here on the close, and again, I don't have it, the grades here to show it. I only have, 25, 50, and 100. This number here closed at about 6, and the volume was like 30-to-1 negative. Okay, so it's huge. It's a little bit overdone. So that's another reason why I'm thinking that this is possibly going to turn soon. When I show you this is the ShadowTrader overall volume matrix here. I've started to add these numbers in, and on a weekly basis, we're going to start to talk about these numbers every day. Those of you just joining us for the first time, this is very simple. This is the amount that the markets went up or down for the day. This is the overall volume increase or decrease over the prior day on the NYSE and on the NASDAQ. And again, I'm starting to add in this new thing. We're going to put in the breadth ratio, which as you saw here on Friday was 18.1. And I won't show it to you for the NASDAQ, but I'll tell you that it was 19.2. I also have that same chart on the NASDAQ. Okay, and what I'm going to start doing now is I'm going to start adding in these numbers here into our focus report every single day. And I'll show you exactly how that's going to be, right? Let me give me 1 second. Okay, look at this here. So I move this over here. And there's our ShadowTrader Pro Focus Report, which we put out every single morning for only $1 a day. This is $20 through Red Option. I'll show you how to subscribe to it. And here in the Under the Hood section, starting Monday, I'm going to be adding here NYSE breadth ratio and NASDAQ breadth ratio here. So what I want everybody to do who's subscribed to this is I want you to print these out every day or just save them or write down the numbers so you don't have to wait for the video each weekend, and then start to see if as the market goes up, if you start to see some correlation, okay, between these numbers here on the NASDAQ and NYSE breadth ratios. Like here, when you get your issue tonight for Monday or tomorrow, whenever it comes out, you'll see here it's going to say 18 and 19 underneath, and it's going to say NYSE breadth ratio, NASDAQ breadth ratio. And what you want to be looking for is divergences as the market goes a little bit lower and this ratio doesn't get lower, and then if the market powers higher, you're going to want to see that breadth ratio at least at like 80, 75. You want to see numbers well over 50 to indicate that there is some strong buying or at least some short covering, whatever, coming into the market. Okay, so one last time, this is the ShadowTrader Focus Report. We put this out every single day. It's got great trading ideas every single day, and it's a companion to the ShadowTrader Pro Auto Trade service, which you can sign up for here. This is $20 a month, $1 a day, and you sign up for it here at www.redoption.com. And then you just go down here and you click on ShadowTrader Pro over here. All right, enough on that. Okay, so ShadowTrader Pro, or rather ShadowTrader Overall Volume Matrix for this week, extremely bearish, right? I did want to show you this. Distribution day here on Tuesday, distribution day here on Thursday. Obviously, very heavy. We didn't see any accumulation in the market. The volume did spike on Monday because it was the day after options expiry here. This was interesting to me. Also, one last reason why I think the last may be over. People seem to be just hitting the sell button with reckless abandon here. On Thursday, over 3 billion shares traded on the NASDAQ. 3 billion. That is huge. When it goes over like 2.2 billion, it's a heavy day. All right, so it appears to me that everybody's just throwing their money, throwing themselves at it at the worst possible time, dumping at the end. They just didn't want to hold over the weekend. All right, one last thing here as well on the SPX. Notice that we closed dead at the lows. Right? That also strikes me as sometimes that if there's a minor gap Monday, you could see somewhat of a rally. Obviously, these charts are damaged. Please do not misconstrue anything I'm saying in this video as anything bullish in the bigger picture at all. It would take a lot of time for this much selling to wash itself out of the markets. All I'm trying to show you with all the examples I've given is that the worst is probably close to over. Most importantly, right? Watch this area right here. As I talked about earlier, watch very closely what happens here at the 1450 in the SPX. All right, on behalf of myself and the entire ShadowTrader team in beautiful Philadelphia, Pennsylvania, and of course, as always, all the good people in Chicago, Illinois at Think or Swim, I wish you good trading and good night.